This segment is going to introduce payroll liabilities. A company incurs and records liabilities related to its payroll due to two primary sources. Those two sources are employee-related liabilities. Employees have amounts withheld from their paychecks based on their earnings, and all those amounts withheld by the employer reflect liabilities the employer has to pay those amounts to others. Additionally, employers also incur expenses and liabilities due to the fact that they employ and pay employees. So when we look at employee payroll deductions, the gross pay that an employee earns is based on their wages or salary. The amount that actually ends up being paid to the employees is the net pay. The amounts withheld from their gross pay are for Social Security, Medicare, federal and state and local income taxes, and any voluntary deductions that the employee has requested the employer to withhold. All of these withholdings do not belong to the employer. All those amounts withheld are owed to others. So as the employee is paid their payroll, all of those withholdings are recorded as liabilities. Those withholdings are calculated based on different rates, and these change from year to year. As of 2019, Social Security taxes are paid by employees at a rate of 6.2% on any amounts earned up to $132,900. The max amount that an individual can pay related to Social Security each year is $8,240. Once they have paid that amount, they exceeded that wage cap. Medicare taxes are paid on all wages with no cap. So every amount earned by all employees has 1.45% of the pay withheld by employers to pay for Medicare taxes. Any of the amounts withheld for Social Security and Medicare have to be paid by the employer to the Internal Revenue Service. Same thing holds true for income taxes. When you complete a W-4, you are telling your employer how much you want withheld based on the amount you earn and the number of withholding allowances. The amount that employers withhold depends on different tax tables, and the calculation of those is beyond the scope of this course and very extensive, which can be learned through a payroll accounting course. But all of those amounts withheld by the employer have to be paid to the appropriate government agency. For federal tax, it's to the IRS. For state and local income taxes, it's to local taxing authorities. In addition to those required tax withholdings, employees can also request employers to withhold amounts to pay for other voluntary deductions. Those amounts withheld depend on each employee's request. Examples would include dues for unions, savings accounts, pension contributions, insurance premiums, and charities. The amounts withheld by employers are then submitted to the appropriate agency for which the designated deduction was made. So if we were to look at the payroll journal entry related to payroll expense for an employer, the total salary expense reflects the employee's wages or salary. All of the withholdings are liabilities for Social Security, Medicare, federal income tax, medical insurance deductions, union dues. All of these withholdings are liabilities. The employer owes those amounts to others. The net pay is the amount that actually will end up in the employee's paycheck. In addition to all the liabilities related to employee withholdings, the employer will also have to pay their own payroll taxes. Employers match the amount of Social Security and Medicare taxes paid by employees, and they pay those same amounts to the federal government. In addition to the matching of the Social Security and the Medicare taxes, They also have to pay federal and state unemployment taxes. The federal unemployment tax, as of 2019, is 6.2% of the first $7,000 of wages earned by each employee. There is a federal unemployment credit, but that's beyond the scope of this course. The state unemployment tax will vary by the state. Every state has different unemployment tax rates and rules. All amounts that the company owes related to payroll are recorded as liabilities. So here is the matching of the employee's Social Security and Medicare taxes, as well as the employer's unemployment taxes they have to pay on behalf of their employees. So we can see that the employer actually records 2 journal entries with every payroll. The journal entry to record the payment to the employee, as well as the journal entry to record the employer share of payroll taxes.